Hi guys, happy Friday. It is September 26th. Somebody put out this post that JD Vance is going to be profiting from bankruptcies of farms. So let's just go through this. It's called Acretrader. So let's just go through this. It's modest, okay? He does benefit. It is true, but not as much as people are speculating or spreading. On social media. So let's just go through it.
Acretrader Times JD Vance Final Master Brief. 1. What Acretrader is and how it makes money. Model: buys farmland into deal-specific LLCs and sells fractional shares to investors. Investors earn through farmer rent and eventual capital appreciation when land is sold. Not structured as a REIT, but functions similarly as a farmland investment platform. Fees: charges a 0.75% annual administration fee on farm value, deducted from farm income before distributions. Scale: 2025 174 offerings funded, $411M plus equity raised, 39.9K acres under management. Corporate change: August 12, 2025 Protera Investment Partners acquired the Acretrader platform business. The land data/subscription arm Acres.com remained independent. Deal terms were undisclosed. 2. Vance's involvement. Investment: public disclosures show JD Vance, via Naria Capital and personal funds, invested up to $65,000 in Acretrader. Role: investor, not owner/operator. No evidence of board seat or majority control. Upside: returns track Acretrader's growth, exit events, and valuation. His stake is small but still tied to the platform's fortunes. 3. Incentives in distress/bankruptcy scenarios. Refined incentive matrix. Farmer outcome. Impact on farmer. Impact on Acretrader/investors. How Vance's stake benefits/risks. Farmer succeeds/profitably farms. Stable operation, profits, pays rent reliably. Steady rent, land appreciation, full distributions. Good alignment: higher land values raise Vance's returns. Farmer struggles but continues. Tight margins, stress. Acretrader still collects rent, though lower distributions. Returns slow, default risk rises. Farmer bankruptcy/lease default/forced sale. Loses farm, eviction. Land becomes available to release or buy cheaply, new tenant replaces old. Acretrader may expand holdings at discount, short-term risk, long-term upside. Land boom/commodity surge. Margins rise, input costs rise too. Land values balloon, capital gains flow to investors. Very favorable for Vance, stake gains with appreciation. Land bust/downturn. Defaults rise, farms collapse. Asset values fall, Acretrader can scoop up cheap land. Short-term losses, but buy-in opportunities for investors with capital. Key point: Acretrader's model has asymmetric upside. When farmers fail, Acretrader can benefit by accumulating assets cheaply and repositioning. Farmers bear the losses, investors capture the recovery. 4. Policy impact Trump's second term. Tariffs: raised input costs for farmers, cut export competitiveness. Labor crackdown: U.S. farming relies heavily on undocumented/immigrant labor. Restrictions rightward arrow higher costs and labor shortages. Result: bankruptcy waves and farm distress in post-2025 America. Implication: these policies directly weaken independent farmers while indirectly benefiting Acretrader and its investors, including Vance, by creating acquisition opportunities at depressed land values. 5. Revenue, margins and scale. Revenue estimates put Acretrader's 2024 to 25 revenue at $12 to $15 million annually. Not audited, varies by source. Margins, not publicly disclosed. Likely modest, 10 to 20% or less, given the thin admin fee and heavy overhead. Growth lever, data business, Acres.com, adds subscription revenue, potentially higher margin. Post-sale, platform financials are now consolidated into Prodera's portfolio, transaction price undisclosed. 6. Value of Vance's stake. Initial exposure, $65,000. Ownership percent, likely 0.05%, 0.2% after dilution from later financing. Scenario math, illustrative. $40 million valuation rightward arrow worth $20K, 80K. $80 million valuation rightward arrow worth $40K, 160K. $150 million valuation rightward arrow worth $75K, 300K. Bottom line, Vance's position is plausibly worth tens of thousands to a few $100,000 today, unless undisclosed larger stakes or a premium exit boosted returns. 7. Final all-in-one summary. Acretrader equals farmland financialization. Profits flow to asset holders, not farmers. Vance equals small investor, with stake likely worth $20K, 300K. Distress cycles, bankruptcy, tariffs, labor crackdowns, hurt farmers but can increase upside for Acretraders investors through discounted land acquisitions. Revenue $12, 15M, margins modest. Growth depends on scaling the platform and monetizing Acres.com. Net effect, Trump-era policies that strain U.S. farms create conditions where Acretrader and by extension, J.D. Vance stand to benefit financially.
So there you go. It is true. So the post out there talking about Acretrader being owned by Vance, true, meaning that he is a stakeholder, approximately at 65,000, and that stake could be worth as much as 300,000 or more. Okay, so that's true. And then also they benefit when the farmers file for bankruptcy if they have a relationship under Acretrader. So if they have this relationship with Acretrader, they could buy those assets, farmlands, at a cheaper cost, which benefits them. And when they buy assets at a cheaper cost, in this case farmland, they can flip it just like a house. So there you go. It is true.